Okay, we're talking about HIVE Blockchain today, HIVE on the NASDAQ and HIVE on the Vancouver Exchange. This stock is definitely buzzing. In fact, the whole space is buzzing. So they're a cryptocurrency miner, and we definitely wanted to make an investment in cryptocurrency. Right up front, I want to tell you, I'm not an expert. I'm just trying to learn this, but I knew I wanted to be have some sort of investment in this space. And we're going to start slow. We're not going to just dive right in and assume we know everything. We're going to be fine. Like I would never do that. But it's so readily apparent that this is an up and coming space, and we want to be there in at least a beginner's kind of way, right? And since we're stock pickers, we want to find a stock instead of investing in the currency directly. So we did some screening. Hive kind of came out on top, or one of the top, and that's where we landed. We have an investment in Hive as we speak. So let's take you through that a little bit. Let's jump right into our model. You probably know our model. If you don't, let's take you through it quickly. The top chart is the return on invested capital, calculated our way with accounting distortions removed. We call it CFIRR. Go watch videos on how we calculate it. But not a lot of history. It's a new company, but now we already see 18% return. That at 18, that's that white one there, is their fiscal year. Okay, and then the blue right beside it is the trailing 4 quarters. So their fiscal year end is March. So the trailing 4 quarters, we got a few more quarters in there, and it's just getting better. We love that, right? Anytime you see improving return on invested capital, pretty safe bet the fundamentals are getting better. And who doesn't want to be in a company with better fundamentals? So it's definitely the case here. And in fact, the return on invested capital is now 38%. That's a very difficult high level to achieve. It seems like it's sustainable from what I've read, although there's a lot of questions. Obviously, it's still early, but we'll take a 38% return. Our default valuation, I did not touch this. Sometimes we tweak our forecasts and massage it and stuff, but in this case, I just said, let's just see what the default does. And I like what the default says in terms of, visually appealing. It makes sense to me that that's about what's going on in the company going forward. So the dark blue is the forecast. The top is the cash wire. The bottom is the invested capital growth. So they are growing their invested capital. They're opening up new facilities, buying new machines. So they are investing. You want to have some capital growth in there, and then what kind of return you're going to get on it. And the history is our guide. And then in the long run, just an economic principle is returns tend to fade over the long run, right? I mean, when you get in early and things are hot and exciting, you can get a higher rate of return, but in the long run, things kind of fade. So that's the standard model. Standard model says it's worth $6.85. It's trading at $3.76. Right away, you got to think, hey, that's not too bad. All right. So then we want to compare it to some other ones. And I'm not going to run them in full, but I do have some slides to kind of break it down a little bit. And actually, I want to go back one slide here. Let's go to this one right here. This is all the crypto miners we could find that are publicly traded, and we just wanted to rank them. So this BTBT is actually a little bit higher, 59% return. That is definitely intriguing to us. And then Hive is second best of, I don't know how many we got here, like eight or nine, or is there 10? Actually, there's 10. So Hive is the second best one, and there you see it highlighted there. And then you see some of them are just kind of getting started, and they're not really generating significant cash flow right now. They just got the investment going, and we'll always take the one that is proven over the ones that are promises. A bird in the hand is worth 2 in the bush, and we got a bird in the hand with at least these 3, and then it's not so sure with these ones. So we'll always gravitate towards these. So we had to still we went with Hive over BTBT for a couple other reasons. And let's move on to our next slide. And it's just a little bit more heft, I guess, a little bit more further along with Hive for sure. The invested capital in Hive is 324 million, and this Bit Digital or BTBT is only 111 million. So Hive is 3 times the size and still generating a 38% return. So I'll just take that. I didn't really want to go with a small market cap. I mean, they're all none of these are huge, and just more substantial invested capital. So 324 million versus 111. That's 3 times the size, and yet the market cap is less than 3 times the size of Bit Digital. So better metric there. EV EBITDA, almost identical EV EBITDA. So, and you're only paying, by the way, 14 times for a growing company. That seems pretty cheap too. So there's a lot of evidence here that's building. And then we got the other ones here. I don't think we got a lot of time to go over all of them, but suffices to say we're paying the lowest EV EBITDA. We get the best rate of return. And by the way, it's got a really nice balance sheet. I didn't even get into that, but barely any debt, good working capital, got some crypto on their balance sheet as well. It looks really good to me. So we'll see how the crypto plays out. It's definitely one last thing. It's definitely going to go up and down with crypto and Bitcoin. If Bitcoin's rising, the stock's probably going to be rising. Bitcoin pulls back a little bit, the stock's going to come down too. But it'll be kind of amplified. So let's just say rough estimate, Bitcoin goes up 2%. Well, I would expect Hive to go up 3 or 4% that day. Now, Bitcoin comes down 1%. I'd expect Hive to go down 2 or 2.5% or something like that. So it's going to be amplified. Okay, but very exciting. If you believe in crypto and you want to buy the stock, Hive's a good way to go.